Good morning, everyone, and welcome to the Pivot Boss pre-market video for Tuesday, September 19th, 2023. I am Frank Ochoa, aka Pivot Boss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. Right now, you'll see narrow range price action at the moment. Inside day heading into pre-market economic data. Super narrow range here, just 13 and a quarter points of range. That's about a third of average on a 10-day basis. 5 and 10-day averages are about the same right now. And this is a buildup ahead of Wednesday's FOMC. We got the 2-day FOMC meeting starting today. They conclude with the statement and the rate decision, 1 o'clock p.m. Central, Wednesday. That's going to give us our next FOMC key level. Last time we got one was this one right here. A little chop, big time movement away from it, and then a move back toward it, although didn't test it on this recent move. Now, right now, again, ahead of pre-market economic data, we could see a little bit of potential expansion. If it's to the upside, we could see a little move that takes us maybe back toward 45.40, but still overall staying in the range. Not expecting full-on expansion outside of this range before Wednesday. Instead, looking for prices to continue to build some energy ahead of Wednesday's announcement. All right, let's take a look here at the NQ. NQ also with a narrow range today. Inside day, 62.75 points of range. Just 30% of average right now. Super narrow inside day developing here. Again, ahead of pre-market economic data, which could push things one way or another from a short-term perspective. This morning we have building permits and housing starts prior to the RTH Open. And then once that's done, we're pretty much waiting for the Fed Wednesday. So continued build out here. If we do make a little bit of a push to the upside, maybe a move as high as 15.6 could be in play, but you're still going to be mostly in the range, building energy ahead of Wednesday's announcement. All right, let's take a look here at crude oil. Crude remains on fire. Super bullish price action here. Continued overall strength. Never once really testing the 8-period average ever since the crossover here, the outside day up. Big time push. That changed the entire directional conviction of this market. Since then, never once testing that 8-period. That shows you how incredibly bullish this market has been. The previous session, we did have a higher low here, and we could make a move to a push below that low, which could provide a buying opportunity for continuation up. Any retest, perhaps, of prices at 90 or just below, again, could offer an opportunity to extend this into resistance above at 94. 94, the next key level above. Once we do reach 94s, it's going to be a big time test at that edge. If there's a reaction, maybe a return back toward 89 could be in play. A push through it starts to open up a path towards 102 to 104. All right, let's take a look here at gold futures. Right now, gold futures up about 0.2% here, trending higher at the moment. Very bullish price action the last several days, especially when price came just shy of the previous month's low. Again, this is what happened last month as well. As prices were dropping down, they failed to reach the previous month's low prior to that. So again, a converging type of market here with higher lows and lower highs coming into a point. Now, this recent turnaround occurred off the 200-day moving average and has pushed prices right back up within the range. And we're now back chopping around the 1950 level, which has been a very important level in this market. With this upward continuation, this upward bias we're seeing right now, we could see a continuation back toward 1968. The previous month's close up above here. And again, we're kind of just at the center of this range as this thing continues to build energy for a breakout from this range at some point. At some point, we will see expansion, could be fairly significant. Until then, upward trending bias here toward 1968, 1970. All right, let's take a look lastly here at the YM. With the YM, we're seeing a super narrow range of just 87 points. 87 points, that's 28% of average right now. And this market has been averaging easily about almost 300 points per day. Let's see, right here at 280, but that's off of recent action as well. So we're about right here on the averages. That's going to be about 300 points per day. And so again, if we have a narrow range day today, somewhere between 200 points, maybe a little bit higher, 250 points could be in play depending on if we test an edge out of this range. Right now, it's perfectly inside day, chopping around the midpoint of yesterday's digestive day. That 2-day range could lead to a big time opportunity once the Fed comes and goes Wednesday. Now, this is the key range to continue to watch for the YM, the 35.177 level, very important. Failure to get back above that zone, and you're working your way back to 34.619, and maybe even across the range into 34.062. So key range right here, very important as this market builds out ahead of Wednesday's Fed. All right, that is it for now. We'll see how this develops the rest of the day. Good luck, trade well, and I'll see you in the trading room. Take care.